So in this video, I'm going to go through how I made $200,000 on my first flip project. So this was a while ago. This was around this time that I did get into real estate. When I first got into real estate, I bought a few single family properties. After buying a few of those single family properties, I then got an opportunity from a tenant to buy a fourplex apartment building. So I had a tenant in one of my properties that mentioned who has a friend that's looking to sell his fourplex. At the time, I was really interested in buying more properties and I wanted to understand more about the property, so we arranged a meeting. I soon found out the property was actually in a really good location. You could tell the seller just wanted to sell the property. He didn't want to do any of the work. He was actually living in one of the units. He had, I think, one or two other units rented. The one unit was vacant, and when it came to price, it was very reasonable. At the time, it was about $200,000. The only issue I had at the time was I just didn't have cash on me, just because I used it to buy other properties. So I was in a situation. But I remember by going to events, by getting some mentorship, by reading books, that you can get creative with real estate. And one of the things I brought up to the seller is, would you be interested in doing some type of seller financing? So it was at this time that the seller didn't really understand what seller financing was, so I had to explain it to him. And we had several meetings to kind of break down what that was and how he would benefit from it. And he eventually agreed. So he did agree. I still had to come up with, I believe it was around 10 to 15,000 at the time. I don't totally remember, but it was around that mark. Still had to come with money, anywhere from 30, 40,000, and then obviously some renovation cost. So what I did was I went to some family and friends to see if they'd be interested in lending me some money to do this deal. And that's exactly what happened. So I was able to get that money to close and do the project. And that project took around a year to complete. I did a lot of the renovations myself. That was kind of the tipping point where I realized that I am not a contractor. It worked out, but obviously it was a small deal. There's no way I could do that on like a 20, 30 unit apartment building. It would just take way too much time. It's just not worth it in my opinion. But I was able to get that done. And then we sold that property and we sold it for around 400 grand. We made 200,000, but obviously, you know, the rules have changed. Back then you were able to kind of buy a home, live in it. And I believe if you lived in it for a year, you're exempt from taxes. Those rules have changed. So in today's market, there would have been obviously your expense to do the renovations minus obviously the taxes as well. But at the end of the day, you would have still made money either way. And overall, it was a good project. Some of the things I'd probably do differently would be to implement better systems. We did have, I did hire a contractor at the time. He wasn't the greatest. And again, it was like my first project, so we didn't have really good agreements, and it got messy at some points, but we were able to kind of hash things out and complete the project. But yes, definitely have better systems in place, vet the contractor, have a contractor agreement, and also I tried to make sure this project would only take around 5 to 6 months. Something like this for units should be quickly. It shouldn't take you a year to do this project, because obviously the faster you do it, the more money you can make. For new investors, something that I would also recommend is, you know, everybody wants to do these projects on their own. If you're new, I'd obviously team up with somebody that's already done it, hire a mentor, hire a coach, because so what happens is sometimes when you're new, when you don't understand something, you make a mistake, and the mistake can cost you a lot of money, right? Especially when you're in an environment that it can change really quickly with interest rates going up or down. You don't want to be in a situation where the market goes down and you're caught with a property that it now becomes a buyer's market, right? And your property doesn't sell quickly and you might now have to rent it out, right? Or you might have to hold it. And if you have private money, family's money, and you didn't factor that in, you could be losing a lot of money, or the property might not cash flow, right? So you don't want to be in those situations. You want to be able to go into the project, understand the numbers, but also understand the exit strategies so you can execute it on it quickly so you don't get into those situations where you will start to lose money. And when it comes to real estate investing, everything has risk attached to it. So it's really crucial to do the numbers and to make sure you have an exit plan. A lot of people go into these real estate deals with no exit plan. You have to understand what is the exit plan. How are you going to get your money? How are you going to get your return?